Good morning. This is Harada speaking, CEO of Torishima. Thank you very much for taking the time out of your busy schedule to attend our briefing session. And for those of you attending online, thank you very much as well. Before starting the financial results briefing, we would like to introduce the new executive team. I myself is the representative director, CEO Harada. This January, we have newly set up a position of CFO so that we can give you a more clearly identified or outlined financial information. James Timmers has become our CFO, and to enhance the IR department, we have set up an IR department itself, and the group leader is appointed as Moriwake-san, and Hagiwara-san is joining us today. So as much as possible, we'd like to introduce our company in detail so that in a more professional manner. So we'd like to solicit your continued support. Thank you very much. Now, I'd like to start by presenting the introduction for today's presentation, and then I'd like to pass the baton to our CFO for the financial results briefing. So as you are aware, pumps are essential for the entire society as well as human beings. And last Saturday, when I watched the NHK program, there is the coral reef in Tokyo Bay, just the ones that are in the southern islands. Therefore, that means the Tokyo Bay's sea temperature is rising and merely goes below 15 degrees Celsius. So that means global warming is taking place and that causing torrential rains or lack of rain. And that is threatening our day-to-day lives. On the other hand, AI and data centers are advancing rapidly. Therefore, we are in a chronic shortage or in great need for power. A forced Middle East conflict is unfolding in front of our eyes. So once again, we'd like to revisit our purpose of addressing the energy issue and also how to contribute to the safe and reliable societal establishment. And this is the Torishima's long-term vision. In 2019, we celebrated our 100th anniversary, and 2029, we will be celebrating 10th anniversary. And in 2049, when we celebrate 130th anniversary, towards that year, we are continuing to grow to become an indispensable company. In 2029, beyond 110 is the measures that we are currently executing. During the first phase one, or the HOP period, that lasted until the end of 2024, our sales grew from 50 billion, but in 2029, we'd like to touch 100 billion and ROE 10%. This is the ultimate goal until 2029. And in 2025 was the first year for this phase two or step period. And we are supported by multiple companies, and they placed many orders, and 100 billion in sales is within reach. However, we need to enhance our efficiency and execute various measures, but OP is yet to reach that goal. So in 2029, we are still committed to reaching this 10 billion in OP, but we'd like to make sure we exercise or execute the necessary measures. So 10 to 100 and 1,000, those are the goals that we say to reach sales 100 billion and OP 10 billion and RE 10% and OP 10%. And Shin Nippon Zoki has joined our Torishima group. The closing will be concluded as of July the 1st by bringing them into our entity and further beyond the 110 anniversary, we'd like to grow further. So the goal of 10, 100, and 1,000. Torishima alone cannot reach this goal. But, with the addition of Shin Nippon Zoki, we'd like to actually surpass this goal. And after July the 1st, we will be announcing new MTP, midterm management plan, and the new business forecast. But our message here today is that the current state of affairs of Torishima, and we are confident that we can still, our Torishima alone can reach this 110, 100, 1,000 goals. So now I'd like to pass the baton to our CFO, James San, and with that, I'd like to conclude my remarks. Thank you very much.
Ohayou gozaimasu. Thank you very much, Harada-san. I think for me, this year has been an incredible year for the company because we have yet again reached a record sales level. We have surpassed this. We've achieved record sales every year for the last 4 or 5 years now. So an incredible feat for the company. However, there are some key highlights that I'd like to just run through at the start of our presentation. Harada-san mentioned the significant growth and in power demand in the AI revolution. And despite a year in which a market where we're quite dominant, very dominant, we are market leaders in the desalination sector. This was a quiet year in the market. However, we were agile enough to refocus our sales and engineering focus so that we could take advantage and fully capture this large surge in power requirements, predominantly in North America. So we've shown business resilience in quiet times that are quiet in some markets. We've been able to adjust, we've been able to react, and orders in the power market have been overwhelmingly increased in 2025. I'll touch a bit more on this in detail later in the presentation, but the key message here is our ability to react to market demands and to follow where there is a strong growth. I'd also like to highlight that this year we've had a significant development in our ability to now enter into new markets. As Harada-san had explained, we will be closing the deal with Shin Nippon to acquire Shin Nippon machinery. That will give us access to new markets in which Torishima does not really play at this point in time. So that's into the petrochemical, the oil and gas markets. We've also developed new technologies and developed technologies within our R&D team to enter the cryogenic markets and to broaden the scope of our supply. Last year, we spoke about improvements that we wanted to make in the business. I believe that we've done this incredibly well. We have significantly improved our manufacturing capability through the acquisition of 2 major machining businesses, one in the UK and one in South Korea. These businesses have almost doubled our machining capacity, so bringing a significant amount of that large surge of demand, significant amount of that can now be brought in-house to reduce the production costs and increase our control of manufacturing. We've also adjusted our manufacturing flows, this front loading we spoke about previously, and that has helped alleviate some of the bottlenecks at the back end of our production. It's helped refocus our energies at the early stages of project execution so that we are engaging with customers on design elements very early on. So that will help us again execute higher and higher volumes of orders profitably in the future. What we've also done is a strategic focus on our aftermarket business. This is a part of our organization that has been growing year after year. In 2025, we underwent construction of a large service facility in Egypt. This opened actually last week and is now operational for this financial year. We expect a significant amount of work in supporting that region. That region's in great need of top tier service support for the large number of pumps that are installed in the country. We're also opening a new service facility in Tennessee in the USA to help us capture more and more of that growing American market. Again, with a significant volume of orders in 2025 for the American power market, we can see that aftermarket business growing nicely. We've also added capabilities within our service facilities. And that's not just increasing our footprint, that means increasing our ability to serve our customers more deeply and also provide a much better rounded service, more of our capability in-house in local regions. So our customers can rely on the best quality levels of service from any OEM in the world. In terms of financial results, as I said, we had a record year for revenue for sales. In terms of sales and orders received this year, it was around the same level as last year. If you recall, last year was a record year in terms of orders received. So we've had yet again another strong year in terms of the front end of the business, receiving orders in and delivering sales revenue. Unfortunately, our operating profit has dipped a little bit. This is primarily due to softer margins in our overseas high-tech pump business. This softer margin stems from two main sources. One, really because of the types of pumps that we were delivering into the market this financial year. In 2023 and 2024, we had lots of large pumps, jobs that had better margins just because of the mix of pumps that we were delivering. This year, we had many pumps, medium-sized pumps and slightly smaller pumps, which at a price per unit level is lower. So that did erode some of our previously strong margins in the high-tech pump business for overseas. We also had some production cost increases that we've managed to address through the acquisition of these two machining businesses, as well as better manufacturing flows. So we will see those cost increases essentially be eradicated, and we've also shifted some of our pricing strategy around those. In terms of the domestic business, that was strong. We had good margins and good service business in the domestic market, and that has delivered strong profits. Our overseas service businesses grew once again this year and delivered profits and revenue at an all-time high. So good, strong growth in our aftermarket. Our ordinary or recurring profit for the year was improved. It was above last year's level at 52 oku yen. This is primarily was driven by the large exchange losses we had in 2024. Those were not there this year, as we had a sort of a depreciating yen during the period. And on a net profit level, we significantly improved from last year. This improved net profit stems largely from the sale of our securities in Fujitec. So overall, a year in which we have grown our install base. We have delivered more and more pumps into the market. We have grown our facilities, grown our aftermarket presence. And despite the softer margins, I think we can really look forward to sustained improvement in our business health and financial performance. It's also worth noting that in 2025, for the next dividend payment, we will be increasing the dividend by 1 yen, so that's to 32 yen per share. This will bring the overall dividend for the year at 63 yen per share, which is 3 yen up on last year. For 2026, we plan on a 64 yen per share dividend. However, as Harada-san said, we will have once we have the finalization and closure of the Shin Nippon deal, we will be adjusting forecasts, our midterm plan, and our forward-looking projections. Again, I think I spoke about the majority of these movements earlier. However, as you can see in this area of the graph, a significant margin erosion in our overseas high-tech pump business. As I said, a combination of two compounding elements there. We also saw an increase from last financial year due to the fact that we did not have this large exchange loss in 2025. So a strong improvement, 7 yen improvement in recurring profit for 2025. Heading towards the plan year for 2026, here we can see a slight decline in the domestic service business volumes. So this financial year we had strong volumes in our domestic service. Next year will be a slightly slower year for our Japanese service business, and hence a decline in profitability from that sector, or profits from that sector at least. However, margins holding. So no drop in the margin levels. It's just the volumes a little quieter this year. As you can see by the 6 yen improvement in the overseas high-tech pump sales, this is really driven from higher marginal profit levels and improved costs on these high-tech large cost pumps. So for us, this is a good story. This is a good thing to see the improvements that we put in place this year coming into our results next year. And we will see improved performance going forward. Should also note that the mix of where we're selling our pumps and the types of pumps we are selling does have an influence on our margins. And I'll touch on that in a little later when we look at our market segment mix. I think the two very key themes that we have for the business are around our drivers, our key value creation for society. As Harada-san explained, we want to be a company that's indispensable to society. And two areas where we think that we are delivering this and we will continue to deliver this is in energy, the energy issues that the world is facing, both through the need for more energy, but also coupled with the requirement to decarbonize, and then in the safety and security of our societies and reliability there. So these areas in the energy sector cover the need for more power. This is where we are strong. Our boiler feed pumps for power generation are market leading, and we've seen a significant increase in that demand due to the big AI boom, particularly in North America. Our efforts in energy efficiency, coupled with our focus on developing new technology for the green energy and new energy markets, will help reduce the carbon emissions and global warming impacts from all of this renewed increase in power demand. In terms of providing security and reliability to societies, drinking water from desalination is absolutely essential for millions and millions of people around the world, and especially in some of our key markets like the Middle East. These markets rely on us, and we have continued to deliver clean products for clean drinking water, and in fact also delivering those at better efficiency, which reduced the cost of water and also reduced carbon emissions from the generation there. And lastly, I wanted to touch on the security that we provide through the floodwater protection. So large pumps for floodwater protection and stormwater drainage. We've also developed a new immersible pump, which is a pump that essentially can operate in and out of water. So during times of flooding, this pump is protected from those floodwaters. I think the Middle East is something on everybody's mind at the moment, not just us, but everybody globally. By the way, I live in Dubai, so experienced firsthand what was going on there. Yeah, it's a tough situation. I think this is something that we're all concerned about. However, at this point in time, we have not seen any significant impact on our business. Operations at our service facilities, we've got eight locations in the Middle East, remained and continued every day. So our customers were supported. These are critical infrastructure sites, power, water. We could not stop. And our customers have sent us letters of thanks for the level of service that we delivered over that time. Our priority is to keep our people safe, to keep our people well, and we managed this very well over this period. So safety and security was a priority there. However, we still managed continuity. I think in terms of the long term, the impacts are unknown. We cannot know, and I think everybody globally doesn't really know the extent of this situation, the extent of this situation will have on the global economy, on spending, especially government spending levels, as well as logistics around the world. I will say, though, however, our exposure to the supply chain is quite limited. We have not seen any impacts on that, really, any material impacts. Some of our coatings and cleaning chemicals, etc., but these are very minor items, and we have alternative sources secured, so we won't see any impact there. What we may see is some shipping delays, timing, because logistics and shipping is a bit of an issue through the strait. However, we do also have alternatives. And next year, as you can see, we've got about 220 in backlog orders for the Middle East. These we can see as quite low risk, purely because they are service maintenance in nature, as well as the big high-tech pump orders. They're weighted towards the sort of middle to third quarter, so second and third quarter. So if we do see any delays, these will still make it within our financial year. So we're fairly confident that we won't see significant impact. I think I've walked through most of the financials. Sorry, I'm just conscious of time here. But I think one thing to highlight is the significantly improved cash flows in this financial year. Last year we absorbed quite a lot of cash, whereas this year we've generated free cash flow of 43 OKN, which is a big improvement, and will help us continue our growth strategy as well as delivering shareholder returns. This is a graph that speaks a little bit to what I was explaining about earlier in terms of it's a change in our market dynamics. So in 2023 and 24, you can see this large portion of our business actually was directed towards water desalination. There's a big projects in the water desalination market. However, so just to be clear, these are orders received, so business that we received orders for in that year, not delivered. So a lot of these orders that were essentially in 2024 would have been delivered in 25. The orders in 25 will be delivered in 26 and 27. But what you can see here is that market was slower this last year, and a 20% drop in our business. Now, that usually for most businesses is a significant impact on your bottom line, a significant impact on your orders. However, we were able to capture and adjust and capture a significantly larger portion of the power market. And this is power market in the US, also in India. So that is a great shift. It should also be noted that the margins in the power, the types of pumps that you sell into power have slightly higher margins. So we're confident that can deliver better profits into the future. And I think you can see here, that significant increase in the USA orders in 2025. And this is not a market that we see going away. It's not a market that we see slowing down. So we're quite confident that we can further capitalize on this AI revolution and AI boom. I think another point that's very important, and we have made this before, but the continual increase in revenue just means more and more and more pumps in the market. So this growing install base of products and assets on various sites around the world. This will then follow with greater aftermarket revenues, and of course, much more favorable margins in those aftermarket segments. So as we aim to drive our install base and increase our install base, we will see an increase in our service revenues. So this financial year, having reached the 300 RON mark for service, and we can see that continuing to grow as we add install base, but also add facilities and locations close to our customers. I think lastly, I'd like to just touch quickly on the dividends and our returns to shareholders. So this year we are obviously increasing our total dividends to 63 yen this year, up from 60. And next year we see that going up again. This is in line with our policy of a rough, or targeting a rough 3% dividend on equity, and a rough 35% payout ratio. I think one thing to highlight is over the last 5 years, Torishima has delivered significant total shareholder returns. So significantly outperforming the TOPIX and industrial machinery indexes. So delivering returns for our shareholders is a chief concern for us, and hopefully that this is something that we can see quite clearly here. I believe there's a lot of additional information in the appendix, and I'm sure you will be able to read through that in time. This map just highlights the number of service facilities and locations we have added to our network. The majority of these we have are fully ours. In fact, almost all of them are fully ours. We are in full control of our service delivery to our customers. And as you will note, we have another location. We've signed a 10-year lease for a facility in Tennessee. and that will be another pin in the map for us to service that North American market. Lastly, I just wanted to quickly touch on the Nippon acquisition, Nippon Machinery. This was agreed on the 10th of February and will complete 1 July. So it will come into our results at the back end of the year. Nippon are a world famous brand in the oil and gas sector. They are well known amongst a lot of our customers, as well as customers that we have been wanting and trying to gain traction in various markets. So we see this as a very strong synergistic acquisition. We feel areas that Nippon want to improve are areas where we are very strong and where we can add a lot of sales leverage, our global sales network, and also our global service network to an excellent product and a highly engineered product. I think that's me for time. Apologies, it was very quick, and apologies not in Japanese. Maybe I can get there sometime in the future. Thank you.